Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey traders and investors, checking in on the broader market. So we had the pattern of a higher low every day. We were getting a little bit toppy yesterday. We knew daily consolidation was not far away because we have not changed the daily trend and we had bounced 20%. And then the bears showed up in a big way again today. Lots of red on the screen. S&P 500 down about 4.5%. And the hourly trend was our guide. A lot of clarity as far as most likely scenarios playing out today. The morning bounce, just looking for an hourly lower high. The loss of the 5-minute uptrend indicating the hourly lower high had been set. The size of the hourly bounce indicating that an hourly bear flag was the most likely scenario. And then we closed weak. A little bit of a bounce at the end of the day, but nothing very significant compared to where we came from. I'm still swinging my SPY short from yesterday's morning entry and using the hourly trend as my guide. So support at these levels after the low of today, 243.90. There's not a whole lot of support. There's one level from extended hours at 240.33 and then 239.75. And again, the question that we have is, number one, can we form a daily higher low and change the daily trend? Can we form a daily higher low and do we form a tightening range as a result? Or do we just drop straight to a lower low? If we're going to drop straight to a lower low, I'm going to have to see bear volume more than the 20-day average here, which is this orange line, if we're going to be able to drop straight through that level, in my opinion. So I feel the most likely scenario is trading within the range of 218 to 263 for at least a week. But we'll take it one day at a time using the hourly trend as always. IWM pulling back notably. Support is down at 95.91 and 95.69. And we are currently about 10% above that level. And the hourly trend is our guide. Anything under 110.38 is just an hourly lower high on any bounce attempt. QQQ, daily consolidation underway. Support after the low of today is 179.98 and then 177.95. And the hourly trend is our guide. Anything under 187.66 is an hourly lower high. And we know that the bulls must change the hourly trend back in their favor if we're going to form daily higher lows. And again, watch the midpoint of these ranges. At this point, the bounce was about $30, which means the midway point is going to be about 180, and we are close to the midway point. For SPY, the midway point between the low of the dump and the size of the high of the bounce is about 240. So we're approaching that midway point on a lot of these sectors. XLF, much weaker than other sectors today. QQQ was 4.25%. XLF was over 6% down. Support from here after 1937 is 19 and 1858 with 1749, the most important level. And at this point, I believe we've already pulled back more than that 50%. Just right around that level, a little bit lower than it today. The healthcare sector is pulling back. We are looking for a daily higher low compared to 73.54. Support will be 84.39, 84.28, and then 82.01. And the hourly trend is our guide. Last little lower high formed at 85.77. Biotech sector, after the low of today, is 70.90 support. In the hourly downtrend, anything under 76.55 is an hourly lower high. We do have some oversold sectors here. Biotech sector oversold at the end of the day. SPY was hourly oversold before the end of the day bounce, right at that level at this point. SMH, semiconductors, weakness after 110.18, gap fill down to 106.30. Hourly downtrend is our guide. So, what is the most likely scenario? In my opinion, like I said, tightening range is what I'm going to anticipate. Looking for higher lows compared to our dump lows. But also, I would be shocked if the bulls were able to change daily trends and break the top of the bounces that we have already seen set. So, there's potential, if not already in a bear trade. Let's say I want to wait on SPY and be patient if I missed my chance. Let's say we pull back to 240, change the hourly trend to the bulls, and then start to bounce on the daily. I can then look for a bearish entry top fishing the high of the bounce at this point. And like I said, we would need increasing bear volume to drop and break 218. We will need increasing bull volume if we're going to break the high of the bounce. So volume will be a good guide. And if that volume doesn't do anything notable and keeps staying in a contained lower range than where we were over the last couple of weeks, again, favors trading within the bounce range for at least some time. The VIX, low, high of the bounce was 68.90, higher low forming at 50.90, and we'll see how long we stay in this tightening range. Most important level for me at this point is 50.90 and 68.90. Even if we see some green tomorrow, still a ways to go to get back to that high. There's a lot of newer traders, unfortunately, and you see them say, I'm in a TVIX position at 800. How long do I have to hold until the price gets back to this level? It's not getting back to that level anytime soon. It got that high because of a short squeeze on the initial move, and we're not going to see that kind of conviction and that kind of power a second time around, in my opinion. Reason being, there's a lot less shorts built up. It's pent-up energy that exploded the first time around, and that pent-up pressure has not rebuilt because we don't have tons of shorts establishing their positions. So even if the VIX does change that daily trend and gets over 68.90, and even if TVIX does break 421.90 and breaks the high of this current bounce, we're still just looking for a weekly lower high to be set on any bounce compared to 1,000. TLT, short-term support of 164.56. Bears are going to have to break that level to see any follow-through. It is a potential daily bull flag at this point. A bounce from 139 to 170 and 1 day of consolidation. We'll see if the bulls can confirm that with continuation, but I'd be watching for the potential of a bit further consolidation. Again, condense it down, look at the 2-day time frame. For me, the most likely scenario is a broader tightening range because this range is so wide. But I would need to see more bear follow-through and a break of 164.56 for that to be the case. Gold's trying to form his daily high or low. It's tightening up. Hourly equilibrium. We have our low of the dump, high of the bounce, double bottom. We broke support by 20 cents. Lower high, higher low, lower high potentially forming here. So a tightening hourly range, a tightening 4-hour range. If the bulls are able to get over 16.01, they'll increase the odds that a daily high or low can be set. And this kind of consolidation would favor the daily bulls because, again, look at the size of the move and the percentage retracement. Pretty much a $200 move. And if we were going to retrace half of that move back, we would have dropped down to about 15.50. And at this point, we've dropped to 15.70, so that's a little slight advantage for the bulls. And potentially interested in that GLD entry I was talking about, although today was a good entry for that. I was distracted this morning, but that double bottom and that bounce would now have a comfortable GLD entry with the stop under that double bottom of 15.72. Silver's also consolidating on the daily, has not broken 13.81 yet, which is the low of Monday. So still pretty contained. 4-hour time frame. Tightening range as well. 13.81 is a double bottom. Bulls would have to break 14.14 to shift momentum. And bulls looking for a daily higher low to form. Bull miners are looking for a daily higher low to form. Didn't change the hourly trend, but just like gold gave us a double bottom, we had a double bottom here as well. 23, the low of after hours yesterday. 22.96, the low of today. We only broke support by 4 pennies before a very significant bounce, but a tightening hourly range just like gold into the end of the day. The bulls would have to break 24.24 and 24.43 for the daily higher low to be set, and I would then be watching for the potential of a daily lower high compared to 27.25 21. Keeping in mind that if we lose the daily uptrend, our weekly lower high will be set, which is why I'm keeping an eye out for that lower high, just in case we do lose the daily uptrend and set that weekly lower high. Oil, 4-hour tightening range. We had a bear break today with no follow through, short-term bear break. So low, high of the bounce, higher low. Anything under 2187 is a lower high that would keep us in a tightening range. If we break 2187, it's a 4-hour trend change, and 12-hour exponential resistance will be right there. I would like to see one more lower high, and then I would like to make a bullish entry playing within this 4-hour equilibrium, because if this equilibrium breaks bullish, if it takes a little bit longer to develop, and this 12-hour EMA drops down a little bit lower, a bull break of the 4-hour equilibrium would also be a bull break above that exponential resistance that has been resistance for a month at this point. And again, still watching this falling wedge, because I haven't drawn it in a couple videos, but and it's really time is making it break bullish. If I were going to draw it, it would be like that. So I need a break of 2187, and I will call this falling wedge breaking bullish. It's worth keeping an eye bullish on oil is the bottom line. 4-hour time frame, the most clear in this tightening range. Natural gas bear break of the 12-hour tightening range, still holding the bottom of 152.4, but that is the only support. And if we do not break 1676, the bears keep complete control. After 1524 is 150 psychological. And that's that. Hourly trends are our guide. Every morning, see where we stand, what would be needed for an hourly trend change, what level would just be an hourly lower high on any bounce. And that's what had bears confident this morning, knowing, yeah, sure, we're probably going to bounce on a gap down open. And we also had a futures support level that increased the odds that we were going to see a bounce this morning. SPX 500 USD. We bounced off this level first thing this morning. Didn't get very far, but it was a decent little bounce. But what kept bears comfortable was knowing that from where we opened, anything under 260.64 was just an hourly lower high, which means we could bounce 3% and still be in an hourly downtrend. Hope you had a good day. We'll check back in tomorrow. See you soon.
It's been unusually hot here the past couple days, so I had to cover up the lettuce with some remake cloth, which gives it shade, otherwise it'll get all wilted. Doesn't generally like the heat. And I also transplanted some Napa cabbage, some broccoli, and some Romanesco into their beds. Planted these potatoes literally 3 or 4 days ago, and they are just ready to explode. These will be big bushes in no time. Blue potatoes. Peas are going, they're ready to start reaching over and grabbing this chicken wire to climb up the fence. This is one of the first bushes to bloom, and it is just full of bumblebees, honeybees, all kinds of everything.